Hello. Good morning, everyone. Morning. Welcome to our Wealth Coffee Chat. I hope you're all awesome and well. Wherever you are, a few of you are up and at it already, which is awesome. Good morning, Aaron. How are you going? Kevin's there from Florida all the way. Chris is in the house. Luke's here too. Jeff, out and about. Traveling the world, mate. Stay safe, Jeff. Stay safe, buddy. All right, folks. What's going on? Well, it's interesting times, as always. I think there's always something interesting going on. But, hasn't been a lot of talk about the old interest rates of recent times. But I thought we might talk about that today. Be interesting to have a bit of a convo. There's a few conversations out and about, which is pretty interesting. So let's have a bit of a yarn about that. But before we do, I'll do the intros as things warm up, get things going. Jason Witten's my name. If you didn't already know, most of you do. But if you're new, give us a shout out in the chat. Say hello. Let us know where you are in this wonderful world. Welcome to the show where each weekday we get together, have a bit of a yarn, a bit of a chat, coffee chat, matter of fact, about what we think is going on out there in the world of property investing, and, see if we can make sense of it all, folks, because as you guys know, there's a couple of sayings around here. If you're new, welcome to two important things to understand. Property, real estate investing, residential is a marathon, not a sprint. It ain't no get-rich-quick scheme, that is for sure. Certainly, if you own something, and this is one of our sayings here, buy well, don't sell. Buy a great property, keep it for a long time, and you will become wealthier than you think. I know a lot of people who've owned a property for 30 years, very happy. So do that if you're into property investing. Take it easy, buy a good one, and away we go. All right. Morning, Deb. There's Deb. Morning, Mick. Mick's in the house as well. Morning to you. Now, seems like my connection is dropping in and out a little bit this morning, unfortunately, but we'll keep rolling. Let me know if you can still hear me and things are still rolling, but we'll get into it. We'll make sure we keep rolling today. So what are we going to talk about today? What I want to talk about today is the idea that we're on the verge, folks. We're on the verge of the next market movement. The market has been slowed down a little bit. It has been compressed or oppressed or whatever we want to call it because of the interest rate rises, 12 in a row, 12 interest rate rises in a row, the fastest interest rate rises, interest rate rises in history, fastest in history. We've been breaking records everywhere, folks, all history breaking records, which is pretty interesting. I don't even know what that word is. What did I write there? I'll rub that out. History. There you go. Fastest in history. Where do we find ourselves, folks? We find ourselves at a cash rate of 4.1%, and lending being a lot more difficult than it used to be. For you and I, back here, back in sort of, let's call it, 21 and 22, this was the golden age. This was the golden age of borrowing, servicing, and debt. There was a bit of jiggery-pokery, but it was a lot easier. What's happened? The average Aussie has had their borrowing power reduced, folks, reduced 40 to 50%, 40 to 50% over the last 12 months. So, if you're out there looking at a nice property, let's say, you wanted to buy something, let's say for 700, if your borrowing power, has dropped, then, you're at 400. Maybe you don't even qualify anymore, right? Even for any loan. It depends. However, like Luke's saying here, if we can survive this, we can do anything. You're dead right, Luke. These things, the challenge with most what I call good time Charlies, those are who, into this and they think the short term is forever. No, it's not forever, right? And on both sides of the coin, right? Interest rates went down to the lowest in history. Now, like, who in their right mind thought that was going to be that way forever? All right. Only people who, let's say, financially naive. Those interest rates were low for a while. The smart people got on the bandwagon and took advantage. Some people got the timing right, and then they've adjusted. And they've adjusted pretty significantly for us as property investors. However, let's talk about what is on the radar, folks. What's going on right now? Because we've weathered the storm so far. What does the future hold, folks? What is going on in the market when it comes to the world of property investing? And where do we sit right now? So let's do a bit of an analysis because, the wood pile's been built. I don't know what's the best analogy here. The firecracker is ready to go, right? Because things are lining up. Number one, supply is very low. Like supply, construction, supply to the market. There was talk about supply just recently. Resales are up. Yeah, resales are up from record lows, and they're up 20% from the lowest ever. Nowhere near, long-term averages being sustained, right? So yeah, interest rates have gone up, put a bit of pressure on people. Now might be a time to sell. And mostly what we're noticing out there is people are selling, properties that they need to get rid of. And the quality of that supply is pretty low. Like the quality's a bit average. Right, supply's down and supply will not be fixed, folks, like for 5 to 8 years. All right, so supply is going to be constrained for 5 to 8 years. You guys know the drill. Yep. And Luke's already calling it. So am I, Luke. There's a boom coming. There's something coming. And the tinderbox, the spark we need will be is forecasted to come soon. So supply down, population up massively. The largest single influx of people into the country, and continued high immigration, well over and above forecasts, and forecasted over the next 3 to 5 years Folks, 1 to 1.5 million people. 1 to 1.5 million people, right? So over the next 5 to 8 years, we've got the rubbish, the worst supply we've ever had. 1 to 1.5 million people going to come into the country. Net gain, folks. Net gain. Of age, need housing, have jobs, bring money. Not a bad idea. Want to be on this bandwagon, folks, I can tell you. And rents. Okay, again, rents are up. Rents are up. They've gone up pretty significantly. The pace of that rent growth is slowing, but it's still going to go up a bit, and the pressure will be there, all right? So we've got all of these things sitting here right now. What's around the corner? What's on the radar? What thing will light this up like a Christmas tree? And we've got investment spending and infrastructure. We've got, other things coming. We've got, Olympic Games in Brisbane and, all those sorts of things. We do have some headwinds, unfortunately, with our number one menace. Who's the number one menace to our wealth, folks? Like, what group in this country is the number one eroder of individual wealth in this country? So tell me who that is. A few of you might know who I talk about with this. Yeah, who are they? Who are they? Put them in the chat. The government. Exactly. The damn politician. Change their mind. They change their rules. They stick their grotty hands in your super. They increase taxes because they're bad at managing the friggin' country. Absolute muppets. But anyway, right now they're trying to mess with a few things, but I don't think it's going to stop what's coming. Not a chance. Not a chance. Not a chance. What is on the radar, folks? Well, all of the four banks, dictator Dan. All of the four banks, folks, are predicting interest rate drops. NAB reckons that, there might be one more rise before the end of the year, but we can see inflation is down, unemployment's up a little bit. That's what the government wants. They want unemployment to be up a little bit. And so what's on the radar? What's everyone talking? And every lender is talking interest rates down at least 1%, right? At least 1%. At least 1%. And at least 1%, right? By the end of 24, 25, okay? 24, 25. I should just put that in the middle anyway. Okay, all of them are predicting and expecting rates to drop at least 1% and maybe even further in 24 and 25. What does that do? What is that going to do to our ability to borrow? And what will happen when interest rates go down? Our ability to borrow goes up. Boom, here we go. All right. Now, folks, it's already underway, and let's have a look at what is going on. Let's go and have a look at my favorite little calculator here. Let's go over here and have a bit of a play. So, great little calculator here for very rough serviceability. There's a lot more detail to go into it, but this is just an example, right? We use this calculator all the time. It's fantastic on how we do it. Now, I've chucked a working couple in here. We've got one person on 100, one person on 50. I said, can we borrow $1 million? Can we borrow $1 million right now with this person? There's very little in the way of liabilities here. I haven't done a whole scenario. This is just an example, right? And the reality is, no, we can't borrow $1 million. No one's going to lend us the money. We've got an assessment rate at 8%. We've got a product rate at 7%. And have a look at this, folks. Check it out. Check out the assessment rate now. Remember, who remembers when the assessment rate had to be, things like, it's still in a few of these, right? Have a look at the difference there, 2% and 2%, the assessment rate, which is kind of the risk rate that they put on top. Some of the lenders already are closing that gap, and seeing if they lend you the money. All right, so there's a few players in here, but we're not getting there for $1 million. Let's go down and have a look at what can we do. Yeah. And yeah, let's go and have a look at inside the system here. Already there's special buffer information, right? And this is new, Westpac, CRA, Pepper, like there's a few lenders already. And let's apply a low buffer assessment rate. Ooh, that's interesting. Already some of the lenders are unlocking this where they can. Let's apply that. Let's see if we can get any better. Interesting. Almost got there, folks. Almost got there. Bankwest, CBA, NAB, Advantage. Wow. Like there, that's pretty interesting. But let's go and have a look at this. Let's go and have a look at if we override, let's go override the interest rate. Let's go override the interest rate and let's drop down. Let's drop down. Let's override Adelaide Bank here. Let's drop the interest rate down another percent. So let's put 2.6% in there, and let's see what happens on that. And type. All right, that'll be right. Now it's not working. All right, maybe we're going to close that. Close that. Does that work? No. Anyway. I've had it working before. I don't know what to press. But if the interest rate drops down a full percent, team, maybe for you and I, it's going to unlock that ability for us to borrow that next level, right? If that drops down a full 1%, this person's going to be on their way and they're going to be easily able to borrow $1 million. Actually, I think I pressed the wrong button. Let me go in and press the right button. Let's do it for Advantage. All right, in here. Let's do 3%. Let's see if that works. There we go. There we go. I pressed the wrong button. There we go. So look, Advantage. We dropped the interest rate down. We dropped the interest rate down to 4% because that's where it's going, right? And boom, we've got the $1 million. All right. Okay. So I did it on Adelaide Bank rather than Advantage. So the idea, team, folks, is this. Very soon, within a year, we're going to have a return to lower interest rates. All right. Lower interest rates. And my question to you, my question to all of you, are you ready? Are you ready? Are you ready? Refinancing right now and getting your equity ready, important. Having a look around, chatting with your coaches and your team, because we already know, I already know, Sam already knows, we are already seeing the new supply of real estate into the future being more expensive than the existing supply right now. And that's just the way it's going to be. Not only is buying power going to unlock, but the future values are already being set by new properties coming through. There's not as many as we'd like it to be. But, are you ready? Are you in place? What's going to happen? Now, listen, someone's borrowing ability going from, 600,000 to 800,000, that'll be pretty cool. That'll be pretty cool. Anyway, folks, Wealth Coffee Chat done and dusted this morning. We're on the edge. It's going to happen next year. But if you wait till it gets running, if you can buy now, you should. Alison, you're trying to get it sorted. I know you are. I know many of us are. But don't muck around. For some of us, we might need to make sure we've double checked and triple checked. Like don't wait around. Don't miss the starting gun. It's already the shot's gone off. The thing's already running. Anyway, there you go. There you go. All right, folks, that's it. I'm just dribbling on now. Thanks for joining me today. Good to see all of you. Come and hang out tomorrow if you want to for another Wealth Coffee Chat. If you're up for it, we'll do it again about 8:10 tomorrow. Till then, folks, remember, this thing's a marathon, not a sprint. Takes time to build wealth with your real estate. Buy well, don't sell. Actually, sell strategically. We know that now, don't we? But if you don't have to, then don't. because the in and out costs are a pain in the neck. Anyway, there you go. Stick with the saying, buy well, don't sell. It sounds better. Anyway, folks, that's it. We're done. Over and out. See you tomorrow. Bye-bye.